Right, traders, welcome back to the Liquid FX YouTube channel. Here we're going to be going over one of the most important topics, which is essentially marking out a naked chart, right? How can you mark out this naked chart? So here I have the euro dollar chart in front of us, one of the most popular price action pairs, right? So every time I mark out a chart, I understand and look at four things, right? So first we need to look at our market structure, right? So the market structure you're seeing in black is the daily market structure. Again, this is the euro dollar. So what we've seen is we've seen the market break structure down here, right? So this is the structural break over here. So when you see BOS, that simply represents a structural break to the downside, right? So remember, there's four things that we want to look out for when it comes to determining how we analyze the markets, right? The first thing we look at is market structure. The second thing we look at is our dealing range. So what is our current dealing range? So our current dealing range is essentially the most recent swing high, which happens to be up here, and our most recent swing low, which happens to be down here. And once we have that in place, from here we get our dealing range. So this is the dealing range high and dealing range low, right? So this is how we project the Fibonacci tool from the swing high down to the swing low. The next thing after that becomes the premium and discount arrays, which of course comes from the Fibonacci tool itself. The equilibrium gives us the PD arrays. And the fourth thing we look at is we look to see the inefficiencies or the fair value gaps, which is what we're going to which is what we're going to look at now, sorry. So now if we understand we're pretty close to the equilibrium, therefore it's quite hard for me to make a decisive comment on the price action, which I think is going to happen next week, right? But what we have is we have a fair value gap just over here in this region. So this now becomes a bearish point of interest, right? This now becomes a bearish POI. So let's label that in red. What we have down here is we have a bullish POI as well, right? So this is a bullish POI. And the reason this is a bullish POI is because it leaves a bullish fair value gap. Once you have your fair value gaps in place, it's just a case of understanding which fair value gap is price likely to gravitate towards next, right? And as we're pretty close to the equilibrium, it's very difficult to make a decisive bias, right? We also have a draw on liquidity just over here. Now, what makes a draw on liquidity? Well, a draw on liquidity is a weak structural high. So notice how this high over here hasn't actually broken the low because the low is all the way down here, right? So this is a weak high. Now, we understand the market targets weak highs, and typically above these weak highs, we have fair value gaps just over here, okay? Hence why we have a POI. This is a POI over here. And so from here, we could see something like this, right? But this is me just speculating. As we are close to the equilibrium, it's hard for me to say exactly. Now, the 4-hour time frame paints a similar picture where we have bearish market structure. We have a swing high and a swing low down here. And now prices come and retraced right up into a premium, right? So we've reacted off a bearish POI just over here. And now the 15-minute time frame. The 15-minute time frame paints somewhat of a slightly different picture now. We have bullish price action. We've got bullish structure, sorry, as we headed higher up towards this POI that we mitigated on Wednesday. And now from here, it's quite simple. If this structural low over here does get broken, so this structural low is at 1.087. So let's just mark that out. This is 1.087. So if we see price break below this structural low down here, then from there, I do expect bearish pricing. So if we head down now to the to the 4-hour, the 4-hour, of course, has a POI just over here. So I'm not saying price will get down to this POI over here, but ultimately from the 15-minute time frame, if we do see the markets break below this level over here, then I do expect lower prices on the euro dollar, right? We could potentially be gravitating towards this POI over here. So this is my narrative or market narrative on the euro dollar. So now on the GBP USD, right, cable time frame, let's just zoom out and understand where we are in price, right? So we've had the previous structural. This is the 4-hour previous high over here, right? So this is what we call an old high. Very important concept to understand. Now that we have broken the previous 4-hour high, what we need to understand is whenever we have an uptrend, right, whenever we break a previous high, we often get a pullback, and then we break a previous high, and above the previous high, we get a pullback. This is exactly where we are in price now. So it's an interesting area, right? I had this daily POI marked up. I suggest people look at my previous videos to understand why. But from here, we could see price head down into some of these fair value gap levels before ultimately heading higher, right? So if we just zoom into what we have most recently, the 15-minute time frame has actually broken structure bearish, right? So we've seen an internal shift of structure just over here, right? We've seen an internal shift over here, but with that being said, we have some fair value gaps down here and down here, right? So this is the overall narrative. If price were to continue lower, again, we're above an old high, so we could see price ultimately head lower, giving us that correction, right? So again, let's use the fib tool to project what I think is going to happen. We have a structural low and a structural high over here, right? So again, if this is indeed the structural high, we could see price head down into some of these fair value gap regions before ultimately heading higher. This is my Forex outlook for the week ahead.